Hi, I am Dinesh Balachandran, and today I am here to talk about the SBI Multi-Asset Allocation Fund. As we have seen in the markets over time, equities represent one of the best ways to generate wealth over the long term. However, most investors are not able to capitalize on this trend. Why? First, there is this basic human psychology where most of us are hesitant to invest close to market bottoms, but get comfortable investing only after valuations have moved up significantly. This leads to significant dilution of returns. Second, there are many investors who are comfortable taking some equity risk, but are wary of the significant drawdowns that are occasionally seen in pure equity funds. The SBI Multi-Asset Allocation Fund attempts to solve these problems by investing in a mix of equity, debt, and gold instruments. The combination of these three asset classes results in good diversification and improved risk profile for a portfolio. Equities, as mentioned earlier, has the best wealth generation ability. Debt has the important role of providing regular income, coupled with the fact that under recessionary conditions, long duration debt tends to do very well, even as equities can temporarily fail to perform. Gold, particularly in the current circumstances, has a very relevant role to play, as it acts as a good inflation hedge and provides protection against systemic risks. Unlike last decade, inflation is likely to play a bigger role this decade, and gold from that perspective can be a good addition to a portfolio. In SBI Multi-Asset Allocation Fund, the allocation to each of these asset classes is varied in an objective, systematic fashion to improve the return and risk profile of the fund. The equity percentage in the fund can vary from 35% to 80%. Debt can vary from 10% to 55%. And gold can also vary from 10% to 55%. From a taxation perspective, the SBI Multi-Asset Allocation Fund is much more efficient than fixed deposits or even pure debt funds, as investors redeeming post 3-year holding period can avail the feature of 20% tax rate with indexation benefit. The asset allocation in SBI Multi-Asset Allocation Fund is based on a principle known as risk parity framework. In this framework, the allocation to each asset class is based on its volatility profile. An asset class showing increased volatility, or said simply, showing bigger ups and downs in prices, will get lower allocation, while an asset class behaving in a very stable manner will relatively get higher allocation. The model is run on a regular basis, and recommended weights for each asset class is determined in an objective manner. Post this, we arrive at the last but probably most important step of stock or security selection. At SBI Mutual Fund, we have an extensive analyst team who are the sector specialists and have been tracking their sectors for a long time. We feel very good about our research process and heavily rely on our analyst team to pick the best possible ideas, both on the equity and fixed income side. So, when you put it all together, we have a nice combination of objective framework and strong research processes to arrive at what we think will be a robust portfolio that should do well across market environments. By providing exposure to equity, debt, and gold in a tax-efficient manner, the SBI Multi-Asset Allocation Fund can definitely help investors in their wealth generation objective. If you need any further clarification, please feel free to reach out to us. Hope you will consider investing in this fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.